Hello, doctor. My name is Sun Xu. We are from Group 1, and these are my group mates. Global energy industry. Petronas company and the Malaysia branch of Petron plays roles at different levels. Petronas, as a rising energy giant in Malaysia, holds an important position on its international energy stage. While the Malaysian branch of Petron, despite limited public information as a branch of the Philippine Petron Company in Malaysia, also has a unique performance in the local energy market. Analyzing both of them helps to deeply understand the diversified development and the cross-border operation modes of oil enterprise. Ford is a Malaysian state-owned energy company. It has evolved into a multinational group covering oil and gas exploring, refining, chemicals, and new energy with 157 subsidiaries and operations in over 100 countries. A Fortune Global 500 company, it boasts strong global influence. When it comes to business scope, Petronas focuses on domestic and international oil and gas exploration with upstream operations in 25 countries. A major LNG explorer, it has completed over 11,500 deliveries since 1983. Domestically, it operates refineries and downstream business, including petrochemicals and gas distribution. Internationally, it expands through LNG stations in China, India, Vietnam, and the Philippines. To translate to clean energy, Petronas launched the January, focusing on renewable hydrogen and green transportation. The last stage is business mode. Petronas collaborates with international firms and develops independent technologies for efficient resource exploitation. It uses advanced refining processes and global sales network to deliver products. Gathering invests in renewables, hydrogen, and EV infrastructures to provide clean energy solutions. Oil firm expanded into Malaysia as part of its international strategy. While details about its Malaysian subsidiaries are limited, its establishment targets local market opportunities in petrol sales. And when it comes to the business scope, Petrol Malaysia likely focuses on fuel distribution, gas line, diesel, and lubricants, and may engage in crude oil and fuel trade to meet industrial and transportation needs. And the next part is the business mode. The company likely securely supplied through local partnerships and build sales networks, including gas stations and storage facilities. It adapts strategies to local market and regulatory change to remain competitive.
Good morning, everyone. I'm Sun Hao from Group 1. Today, I will bring you an analysis report on asset structure change of Petron Philippines in Malaysia and Petronas Malaysia in the past 3 years, and further explore the different orientation of their strategic development. Our data are derived entirely from the two companies' official financial statements from 2021 to 2023, focusing on 5 key categories of assets: cash, inventory, accounts receivable, fixed assets, and the total assets. I will begin by the following 5 items. The first is the cash and its equivalents trend comparison. As can be seen from the figure, Petronas cash continues to increase from 2021 to 2023, while the Petron's cash has decreased year by year. This shows that Petronas trained to keep a lot of cash as a safety cushion, while Petron is more active in using cash for business expansion and operational investment. The second one is inventory trend comparison. Petronas inventories have been largely maintained at stable levels, while Petronas have been rising significantly from 2021. This inventory accumulation reflects Petronas' strategic orientation to secure its supply chain and respond quickly to market demand. The third one is the accounts receivable trend. In terms of receivables, Petronas grow slightly, while Petron receivables grow by almost 50% over a 3-year period. This shows that Petron is expanding its market by relaxing the customer account period, but it also means greater capital occupation and recovery risks. Next, I will talk about the difference in fixed asset investment. Petronas continues to grow its fixed assets, reflect its steady long-term capex. But on the other hand, Petron saw a slight decline in its fixed assets. This indicates that its limited investment capability and more focus on maintaining its current production capacity. The last one is the total asset growth path. In terms of total assets, Petronas is showing a steady upward trend, while Petron is pulling back slightly after growing in 2022. We can see that Petronas is driving by earnings and capital accumulation, while Petron is more dependent on the expansion of operating assets. Next, I want to talk about the strategic differences summary. The table compares the strategic differences between the two companies. Overall, Petronas displayed a sound, long-term oriented asset strategy, while Petron was more agile and aggressive in phasing liquid assets and rapid market response. These differences are closely related to their size, capital structure, and the role of the state. Finally, here's some conclusions and recommendations. Petronas is well positioned to continuing advancing investment in new energy and globalization. Petron will further enhance its competitiveness if it can improve its working capital efficiency. Asset structure is the most intuitive embodiment of enterprise strategy intention. Thank you for listening. This is the end of my part. Then my team member will continue to introduce it to you.
Let's begin with the borrowings. As we can see from the chart, Petronas experienced a steady increase in borrowings from 86.6 ringgit billion in 2021 to 98.9 ringgit billion in 2023. This trend suggested that Petronas is gradually using debt to support large-scale investments such as energy exploration or infrastructure development. On the other hand, Petronas borrowings rose slightly in 2022 but decreased in 2023, showing a shift toward debt reduction. This contrast reflects two very different strategies. Petronas is more aggressive and growth-focused, while Petronas is more conservative, aiming for stability and low financial risk. Next is deferred tax liabilities. Petronas shows a gradual increase over 3 years from 9.5 billion ringgit to 13.3 billion ringgit, likely due to long-term investment and temporary tax timing difference. Petronas, however, shows a different pattern. Its deferred tax dropped in 2022 and then surged in 2023. This sudden rise may suggest changes in assessed valuation or higher expected profits. Petronas displayed consistent tax planning aligned with its capital strength, while patterns in inflation could reflect shorter-term shift or operational adjustment. And then let's look at other long-term liabilities. For Petronas, the amount stays stable around 50 billion ringgit in 2021 and 2022, but jumped to 64 billion ringgit in 2023. This increase likely includes long-term obligations such as the decommissionation cost of employee benefits plans. Petra also shows an increase in 2023 from 194 million ringgit to 274 million ringgit, which may be linked to lease liability or environmental provisions. Both companies are prepared for future risk, but the scale is very different. Petronas is expanding and taking on more responsibility, while Petra is likely adapt to tighter compliance or long-term commitment. Let's move to the equity, starting with reserves. Petronas shows strong and consistent growth in reserves, increasing by over 90 billion ringgit in just 3 years. This means the company is generating profits and choosing to reinvest them back into the business rather than paying large dividends. Petra also shows a healthy increase in reserves, growing from 1.8 billion ringgit to 2.3 billion ringgit. While the scale is much smaller, it still reflects consistent earnings and disciplined financial management. Overall, Petronas approach is high retention for reinvestment, while Petra follows a more balanced strategy between saving and shareholder returns. Finally, let's look at the total equity. Petronas equity rose from 404 billion ringgit in 2021 to over 502 billion ringgit in 2023. This reflects strong financial performance, supported by retained earnings and a solid capital base. Petra also grew its equity, reaching 2.4 billion ringgit by 2023. While the numbers are much smaller, the upward trend shows the company is strengthening its financial position year by year. In strategic terms, Petronas' higher equity gives flexibility to expand and take calculated risks, while Petra grows showing financial discipline and a steady path toward long-term sustainability.
So afternoon, Dr. and Mechi are going to present about the strategy difference analysis and also for the comparison. And the first part, I am the present with the strategy difference analysis for the Petronas. In the 2023, the Petronas total liability increased by 30%, which reached by the 5.8 billion, and it shows the company slightly issue more deep to the financial assets acquisitions, as the total assets is grown by 7%, and a slight increase in the inventory from the 139.454 billion in the 2022 to the 148.75 million in 2023. It suggests it's the stable demand management. Actually, the cash reserves also decreased by the 47.8% from the 2.889 billion to the 1.507 billion. Also show that the Petronas actually utilize the cash for strategic investment, such as the capital expenditures, also for the acquisitions, and it's also moved and reflects the strategy focus on the growth also for expansion. And actually it will also show that is the leveraging deep also for the cash to strengthen the company market position, also for operation capacity. And next, I want to present about the strategy difference analysis for the Petronas in Malaysia. In 2023, the Petronas total liability also increased by the 2.3%. And the next time, I also continue to do the comparison. In the 2023, the Petronas inventory also increased by the 6.6%. You can see that in the slide there. Also reflecting the stable operational planning also for the replaceable demands. In another side, the Petronas inventory also rose by the 15.4%. Is potentially driven by the price volatility, also for the financial, also for supply chains concern for the demands anticipations. Also it shows that it's more there's a more aggressive ways to the safeguarding supply. Also both companies also reduce the cash holding. Also is the signature is which is the reinvestment. The Petronas cash also dropped like slightly by the 47% from the 2.889 billion to the 1.507 billion. Also it suggests a more aggressive reinvestment strategy. And also for the Petronas cash also decreased by the 36.2% from the 273.7 million to the 174.6 million. Also, it's also sure that is the reinvestment into the capital, also for the operational expenses. Also, both the company also focus on the growth with the Petronas taking a more aggressive ways. And the next slide, I also continue to do the comparison. In the 2023, the Petronas inventory also increased by the 6.6%. You can see that in the slide there. Also reflecting the stable operational planning also for the replenishable demands. In another side, the Petronas inventory also rose by the 15.4%. Is potentially driven by the price volatility, also for the financial, also for supply chains concern for the demands anticipations. Also it shows that there's a more aggressive ways to the safeguarding supply. Also both companies also reduce the cash holding. Also is the signature which is the reinvestment. The Petronas cash also dropped like slightly by the 47% from the 2.889 billion to the 1.507 billion. Also it suggests a more aggressive reinvestment strategy. And also for the Petronas cash also decreased by the 36.2% from the 273.7 million to the 174.6 million. Also it's also sure that is the reinvestment into the capital, also for the operational expenses. Also both the company also focus on the growth with the Petronas taking a more aggressive ways. And I'm going to do a conclusion. Actually, the Petronas is a debt and the aggressive growth strategy, raising the debt also for reinvestment hiring. And also while the Petronas is take a more conservative ways, like focus on the stability, sustainability, also for the mentioned deep users and the operation for the long-term stability. So that's all for our presentation. And thank you, Doctor. We are from Group 4. So thank you for watching our video.
Yeah, now so I will start our second part of the presentation, which is the income statement for the Petronas, also for Petron. We are from Group 1.
Hello everyone, let's start with revenue change. Both Petronas and Petro saw a significant increase in revenue in 2022, mainly due to the surge in global oil price. Petronas revenue rose from 247.96 billion ringgit in 2021 to 333 billion ringgit in 2022, before dropping slightly to 305.76 billion ringgit in 2023. Petronas revenue nearly doubled in 2022 but remained smaller and more volatile overall. This difference shows that Petronas, with its diversified operation, enjoy more stable income streams, while Petro is more affected by market inflections. Next, let's talk about costs. Petronas maintained strong gross profit margins between 36% and 46% over 3 years. In contrast, Petronas margins were very low, under 6%, and even dropped below 3% in 2022. This is because Petronas' cost of goods sold almost equaled its revenue that year. Petronas likely benefits from economics of scale and stronger cost control. Petro, being smaller, is more sensitive to oil price change. This highlights the importance of cost efficiency in that industry. And then let's look at depreciation. Petronas reported clear depreciation and impairment figures. In 2023, depreciation jumped to 6.1 billion ringgit, which may reflect new investment or asset write-downs. Petro didn't disclose depreciation separately, which limited financial transparency. From a strategic perspective, Petronas shows better financial resilience, while Petro could improve in cost control and disclosure. This gives us a clear picture of their long-term financial health.
Now I'm gonna talk about the selling, general, and administrative S&G expenses between the Petron Malaysia branch and the Petronas. This part provides a detailed comparative analysis of Petron Malaysia refining and the marketing, BHD, and the petroleum Nasdaq Berhad Petronas based on their financial statements from 2021 to 2023. The focus is on two key areas: selling, general, and administrative S&G expenses and interest expenses. These metrics offer insights into the operational efficiency and financial health of the companies. Next part is the key observations of the comparative analysis between the two companies. The first one, the scale of the expenses. Petron consistently spends more on S&G expenses compared to Petronas. In 2023, Petronas S&G expenses were approximately 4,552 ringgit million higher than the Petronas. Second, growth rates. Petronas S&G expenses have grown at a faster rate compared to Petronas. Petron's expenses increased by 30.6% from the 2021 to 2023, while Petronas expenses increased by 40.1% over the same period. The last one, operational strategy. The higher and the faster growing S&G expenses for Petron may indicate a more aggressive expansion strategy or higher operational complexity. Petronas, on the other hand, appears to maintain a more stable cost structure, suggesting a focus on efficiency and cost control. When it comes to the interest expenses, Petron's interest expenses have shown significant fluctuations over 3 years. The interest expense increased from 18.364 ringgit million in 2021 to 44.498 ringgit million in 2022, before decreasing to 37.905 million ringgit in 2023. This suggests potential changes in the debt levels or interest rates, reflecting the company's financing strategy and the market conditions. As for the Petronas interest expenses have remained relatively stable, with a slight increase from 5.069 million ringgit in 2021 to 5.500 million ringgit in 2023. This indicates a more stable debt management strategy with minimal changes in interest payments over the period. Now let's see another comparative analysis between the two companies. The key observations show that the scale of the expenses, Petron's interest expenses are significantly higher than the Petronas. In 2023, Petron's interest expenses were approximately 32.405 million ringgit higher than the Petronas. Volatility. Petron's interest expenses are highly volatile, increasingly dramatically in 2022, and then decreasing in 2023. The volatility could be due to changes in debt levels, refining activities, or fluctuations in the interest rate. Last part is the conclusion. The comparative analysis of Petron and Petronas reveals distinct trends in S&G and the interest expenses. Petron consistently spends more on S&G expenses compared to the Petronas, with a faster growth rate over the 3-year period. This suggests that Petron may be pursuing a more aggressive expansion strategy, while Petronas focus on maintaining cost efficiently. In terms of interest expenses, Petron's significantly higher, more volatile interest payments highlight a potentially more aggressive financing strategy and compared to the Petronas' stable approach. This insight provides a valuable context for understanding the operational and the financial strategies of these two major Malaysian oil companies.
Hello everyone, my name is Sun Haohao, and today I would like to present the net profit and the general trend analysis of Petronas and Petron for the period of 2021 to 2023. Based on the official financial statements issued by the two companies, this report helps us understand their profitability and operating performance by comparing net profit, cost control, and operating trends. Let's start with a chart comparing the net profits of two companies over 3 years. Blue is Petronas, orange is Petron. It can be seen that Petronas' net profit reached its peak in 2022, while Petron's overall trend was relatively stable. While Petronas' profits are much larger than Petron's, they are also more volatile. Despite its similar size, Petron achieved 3 consecutive years of profit and recorded the highest profit of more than 300 million in 2022. Next, we analyze the trend of Petronas. In 2021, it recovered from the impact of the pandemic and achieved a net profit of Rm 48,600 million. In 2022, profit surged to a 3-year high of Rm 101,618 million, driven by soaring international oil and gas prices. But in 2023, profits slipped to Rm 80,740 million, mainly affected by the global economic slowdown, falling demand, as well as rising costs. Overall, Petronas is profitable but volatile. So then let's look at Petron's trend. In 2021, it will turn loss to profit with a net profit of 238.5 million Rm. In 2022, the profit increased to 300.6 million Rm, showing good cost control ability and market adaptability. Although there is a slight decline to Rm 272.1 million in 2023, the overall profitability level remains strong. Compared to Petronas, Petron has a smoother profit growth and a relative lower risk, demonstrating a sound operating strategy. Finally, here's a look at how the two companies performed. From the perspective of a net profit, Petronas has a large volume and high profit, but its profit fluctuations are greatly affected by the international market. Petron, though smaller, has been profitable for 3 consecutive years and has more stable growth. In terms of stability and cost management, Petron is better. In terms of size and total profits, Petronas remains more influential. In general, the two companies have their own characteristics, representing the profit model and the development strategy of oil enterprises of different size in post-pandemic era.
Amazing from Group 1. Now I want to present about the comparison also for a static analysis of the Petronas and the Petron about the income statement. And now I want to do a comparison for the Petronas income statement first. Actually, the 7.3% revenue is decreased in the 2023 by 1/3, like the multiple factors, including the lower global oil and gas price, also reduced the demand amid economic slowdown and a strategic shift toward the lower margin product. And additionally, the transport also may include the investment for the key revenue generating the asset and operation discussion caused by the maintenance schedule also for the politics. And also in this slide, we also can find that the gross profit history is fall to the 20.2% in 2023 due to the raising the cost of the goods sold. Like likely is driven by the supply chain inflation also and the less flexible cost ineffectivity also for the procedures like the strategy. And we also can find that the operating profit dropped in the 2023 because it already dropped around the 27.8% in 2023 due to the higher impairment loss also for raising of the admin costs, and it reflected the strategic shift, assets write-down also for the possible rescheduling for the ESG investment. And also we can find that is the tax expert is also for around 57.4% due to the lower taxable income also for great incentive, but reduce the profit from the discontinued operations, 6 like the displacement of the non-core assets for the strategic focus. And also for the strategy to strengthen the resilience, and we need to invest in the renewable of the diversifications, and also we need to enhance the supply chains effective to control the raising of the COGS, also for the maximize the green tax incentive to also to support the profitability, also for aiming the market shift. And now I will do the comparison for a breakdown income statement between 2021 to 2023. Actually, in here we can find that the revenue is also dropped after the post-pandemic due to the oil price and expansion but delay in the 2023, and the price is normalization and the market will become the saturations. Also for the strategy is exit from the lower margin area. And for the gross profit margin, actually you can find that the margin already decreased in 2021 also, but compresses in 2022 until 2023 due to the high COGS, in general by losing the input costs also for the ineffectiveness. And strategy should focus on the supply deal also for the automations investment. And the operating expenses also we need to focus on the mixed trend. And actually in this we can tell that the operating cost is raising because of the market expansion, also for the assets depreciations, while the admin cost is fall from the digitalizations. And the strategy balance also need to between the short-term saving also for the long-term growth investment. And we also can tell that for the profitability also for the tax, actually in 2023 the normalized the tax expenses also reduce the net profit, and the opportunity includes the realizing the sustainability project for the tax credit, also with the optimize the debt management through the refinancings at the lower rate. And for conclusion, we can just need to focus on we need to optimize the logistics. Also, we want to diversify into the renewable resources. Also, we leverage the green tax incentive. Also, we want to devise the performing assets to focus on the high margin section like the replicate. So that's all for our presentation for our group 1 for the income statement of the breakdowns also for breakdown. So thank you for watching our video.